Well, let's look at midweek trading activities. Boason Omofaye has the details from the stock exchange. Good morning, Boason.
Good morning, Chimeze. Thank you very much for coming through, everyone. Of course, it's another a trading day here. But first, if you look over, yesterday's big story was that of result, first half 2018 from GT Bank, one of Nigeria's tier one lender. And you talk about that a little bit earlier. If we choose these earnings first, you find that GT Bank posted a decent 5.9% in gross earnings for the first 6 months of this year. Net profit 14.2% year on year. If you take the first half of 2017 over first half of 2018, profit before tax was 8.4%. But if you look a little bit closer in these numbers, you find that GT Bank interest income was down by 2.4%. Interest expense, however, rose by 20.9%. Operating expenses still manageable, just 1.2% difference year on year between the first half 2018 and first half of last year. Then if you go a little bit down, you look at the net assets in terms of the loans and advances and deposits. Deposits went up about 10.4% for this tier one lender, but loans and advances declined by 10.8%. That's what the basic numbers we have here are showing us. Go down a little bit further and you find that in terms of cost to income ratio, you are seeing from 33.8%, 34.3% was the figure last year, first half, to 33.8%. In terms of earnings per share, 6 naira 20 kobo. This lender, like his colleague, Zenith Bank, will pay 30 kobo interim dividend. That will be paid on the 22nd. Zenith Bank is paying its own interim dividend of 30 kobo on August 24. GT Bank will pay that 30 kobo interim dividend proposed on the 22nd of this month. So they're just a shy of each other. In terms of the numbers, it's still the same. But of course, analysts will still pour over these numbers and give us more of their views on that. But if you go back straight to the trading floor, and you can see some of the shots there, you find that the market was lackluster on Wednesday. It was largely tepid. $2 million in naira total of what we did, 730 million naira. In terms of total transactions, this is the lowest we've seen this week, and in volume terms as well, just 114.03 million shares, and that tells you the market was weakening, about 0.1% decline on the all-share index. Then you look at the 5 sectors. If you take through the banking, industrials, consumer goods, insurance, and the oil and gas, all in negative territory on Wednesday, and that tells you investors' appetite were largely bearish. This market hasn't really broken a new low when you see the all-share index, but we're still around that support level, 36,000. The market is looking for a catalyst to break out of this particular cycle over the last several weeks. So 36,000, we're holding it there, 36,299. Now, if you flip that and look at the oil and gas, which you track on a daily basis, the biggest story from the oil and gas space on Wednesday was Seplat's story, 600,000 special sale of its shares to a major investor. And that is the story. That was the story. Seplat shares remain unchanged in terms of the closing price. And then you find Owando price down by 4.9%. Forte oil remained unchanged. Eternal oil finished off at 1.64% in the negative territory, and Total a negative 2.56%. Investors still remain muted on corn oil despite its positive net profit numbers for the first half of the year. The share was 24.30 when the market finished off here at the stock exchange. Then, of course, if you look at the other markets, if you look at the NASD over-the-counter, look at the numbers. If you're looking at a very bullish Wednesday, 2.27% for unlisted security shares at the lower end of the market, and that's where you find the unlisted securities here. 700.83 on the USI reading. That tells you that this market is holding that level steady, 700 on the USI reading. The total volume, if you flip the page and you look at the numbers, you find 238,960. That looks like a very decent day. Look at the total deals, that's 115. So the USI, the NASD market over the counter was very active on the third trading day of the week. Now, we're moving straight to the fixed income space, and where you find a bullish sentiment returning to the treasury bills market. And if you check through the FMDQ platform, this is the data you find. 115 billion naira on Wednesday. That was the day the central bank conducted the open market operations. Then you find today a repayment of matured treasuries that we're expecting from the central bank. That happens on Thursdays. But if you look at the secondary window of treasury bills via the FMDQ, that gives you a sense of what we're talking about. You can see the 6th of September 2018 treasury bills maturing about 10%, 9.79%. In the Naira bond market, you're looking at about 21.8 billion. That's another active day, although investors are still a little bit skeptical on how they want to go on Naira bond, looking at the entire political space, what is unraveling, and what to expect moving forward. Chimeze, back to you.
All right, thank you very much, Boason. Well, we have Adim Okosa here in the studio to take us through the commodities market. But before we get to Adim, just a very quick one. The CMC meeting is holding today, and talking about the lackluster trading we have seen over the period. Now, are the market traders, investors expecting anything spectacular from the CMC today that perhaps might move the market?
Well, not likely. The CMC hardly move market unless the SEC has a major information for the market on the policy side that will see investors come back very strongly into the market. We've seen this decline in appetite since the end of the first quarter of the year, again, because outlook on the elections, the sell-off in emerging markets around the world. We are a frontier market. We're not even part of the emerging markets yet. But when investors knock the emerging markets, frontier markets like Nigeria, Ghana, Ivory Coast, Kenya will get hit. The only emerging markets we have on the continent is the South African market and, of course, to some extent, the Egyptian market. So we get knocked by that. But again, you see since July that the political quotient, the political risk in our own market is beginning to increase as people see the political wranglings, the defections and deflections and all that is happening, and some of the economic affairs of the state looking a little bit shaky. We're still talking about supplementary budget for 2018. The main budget hasn't really been implemented. We've seen the end of budget 2017. We signed a new budget in June, so we haven't seen the capex announced from the Ministry of Finance or National Planning and Budget Office, the first 560 billion capital expenditure that's supposed to be out of the 2018 budget and going to spending. We haven't heard anything about that. Right now, what we're hearing is that the Senate may sit next week and pass about 220 billion to be implemented for the 2019 elections. So what do you expect investors to think? They're hearing more about the next year election, 2019. They're hearing less about what we're spending into the market itself. They're looking, are we going to be able to do Eurobond by September? As the Debt Management Office chief said about a few days ago, about a week ago, or here on channels, that the calendar is still on for September floating. At least we need to float before the end of the year. At least third quarter will be a good time for us to do that. That is part of what investors are looking at. What will be the new catalyst for this market? Investors are sitting on the fence. What are we going to do? We don't have any major fiscal push that would drive these sentiments to the north side. So what are you left with here at the exchange? What am I left with? I'm left with earnings. And so these earnings, like the one from GT Bank, is something that investors are holding on to.